This is Taking Stock on Bloomberg. I'm Pim Fox. Now, we just talked about the credit environment and its effect on some aspects of commercial lending. Stephen Hagenbuckle is the president of TerraCap Partners. They invest in distressed real estate. Let's find out if you can actually make some money now buying distressed real estate. Steve, it's good to have you with us.
Thank you.
Explain, first of all, sort of the business that you're in so that we have an idea of like exactly where we can get some perspective.
Okay. TerraCap Partners is a distressed, opportunistic private equity real estate fund. We focus on path of growth properties, predominantly residential, multifamily, and single family. We buy heavily distressed properties from builders such as Lennar, Toll Brothers, Pulte, and we buy, at this point, we're buying stuff at anywhere from 20 to 30 cents on the dollar from what they paid back in '06.
So you're the white knight coming in to at least save them from total destruction.
Correct.
All right. Now, you focused on some of the markets that I know you know well. Let's start with Florida, for example. Let's start in the Miami region. What is the state of the residential market there?
Miami still has a way to go. They're still seeing downward pressure on pricing and will probably for another 12 to 18 months. Now, on the West Coast, it's a different story. The West Coast, as we said earlier, FIFO, first in, first out, they started seeing deflation in pricing there about 2 years ago. So it's extremely affordable. Anywhere, and it's so affordable that it's lower than the cost of construction by anywhere from 20 to 30%. So those houses are flying off the shelves. A lot of distress selling right now, but a lot of volume. Setting records with regards to volume on the west coast of Florida, Bradenton, Sarasota area, down to Naples. Very good market. And
what about the amount of equity that investors are having to put in? I mean, if you're going out to buy distressed debt, how much cash?
Usually between 50 and 80% cash.
But this is at a distressed price.
Right. And with the stuff that we do, the larger tracts of land, development land, we're even getting seller financing. We're attaining 10-year long-term financing, 6% interest, non-recourse.
Non-recourse, 6%, 10-year.
That's correct.
What are you doing to get such good rates?
They're in a tough situation. Whenever someone's in a tough situation, it's easy to negotiate.
What about some of the urban areas as we travel around the southeast of the United States? For example, Atlanta, the Atlanta market, as we know, overbuilt to some extent in the commercial real estate. What about in residential?
It's still softening, as is Miami, but not to as extreme of a degree. But Atlanta is still softening, and I think it will for another 6 to 12 months.
Go into a little bit more detail when you talk about the discounts that you're getting for some of these properties. You said, what, 20, 30 cents?
How about if I give you a specific example?
Please.
We're acquiring a property right now that Lennar paid $6.8 million for in June of '06. We just acquired it for $1.8 million. 10-year financing, 6% interest, non-recourse.
And who's going to get hurt by that? I mean, in addition to them taking the hit, what about the financing that was original?
Well, what's happened there, and it's to benefit them, is they're taking chargebacks against previous profits. So there's an upside for them. It's not as bad as it sounds, and that's how they're dealing with it.
When you deal with lenders looking to secure financing, what kind of terms generally are you having to agree to in, let's say, not just in the amount of money you're going to put into the property, but in terms of time?
Oh, it's a much more rigorous process as far as, the underwriting. It's much more rigorous, much more, they take a much longer look at of the legs of the organization, the backing of the organization. It's much more challenging. The loan to values are much lower than what they were in the past. So it's a different ballgame.
Now, previously we had Josh Rosner and Leonard Tannenbaum speaking about the regional banks and how they might have the capacity to lend to small, medium-sized businesses. Traditionally, regional banks have been also very big in the residential lending market.
Correct.
Are you finding that's still the case?
I think they're getting away from that. The banks that got hurt the most, and I actually sit on the board of a bank in Fort Lauderdale. We're fortunate. We're actually the second most profitable bank in our asset class in Florida. It's Landmark Bank. And the reason for that is we stayed away from all development loans and all residential loans. Now, the challenge that the community banks have is this, that most of their portfolios are commercial or residential loans. Their loan loss reserves are not large enough with regards to the write-downs that they're facing. So they're in serious problems. They're basically living off their previous profits.
And so would you be going and perhaps, I know you're distressed real estate, would you be a vulture for a lot of those loans?
Yes, at the right time. Absolutely, at the right time. And we're seeing that through, REO sales, package sales, but they're more complex than dealing direct with some of the sellers that have some equity. So if there's equity involved and someone is trying to sell a property so that they can have cash flow to service their other debt, that's the ideal situation for us.
All right. Now, as someone who sits on the board of Landmark Bank, what about bank failures? FDIC going to be a lot more prominent in the next 6 months?
Oh, yeah. Actually, we had a bank board meeting today. The OCC is now, and I've been on the board for 9 years, okay? I have never seen the OCC actually come and visit us and participate in our board meeting. They're making their rounds. They're double-checking the books and the loan portfolios to ensure that the banks are reporting accurately. This is new.
And is that going to change the way you do business?
Oh, of course. We're having so much more and more administrative aspects with regards to loan portfolio, risk management being pressed upon the banks. It's becoming a real challenge. And just to keep up with the paperwork is becoming an administrative nightmare.
What about other geographical areas? What's the best performing geographical area in the United States right now?
With regards to residential, Southwest Florida. The next area I'd look at is Phoenix. I'd look at parts of California and the LA area, areas to stay away from that still have some downward movement. The Northwest, regarding Seattle area, New York City, and the Midwest.
All right. I want to thank you very much, Steve Hagenbuckle, coming in from, you're the managing principal partner of TerraCap Partners, also the board member of a Landmark Bank. Thanks very much for sharing your insight into the world of residential real estate.